Hey everybody, Britt Williams-Baker from Dow Janes here, and in this video I'm going to walk you through how to analyze the hundreds of ETFs there are to choose from. And so to do that, I'm going to walk you through the Vanguard site. Vanguard is one of many investment brokerages that exists. We talk about them a lot at Dow Janes because they are one of the lowest fee options, but there are plenty of other ways to invest at Fidelity, Charles Schwab, many other options. So in this video, I'll walk you through how to basically look at ETFs and what you are looking for. So if you go to Vanguard.com, it's going to take you to this site, and you just need to make sure you go to the personal investors site. And then at the top here, you will see what we offer, and that's where you'll click down into ETFs. So right under investment products, you'll see ETFs. And then you can click View All Vanguard ETFs to go to the list of every ETF that they offer. And so you might be totally overwhelmed by this page because there are hundreds to choose from. And so I'm going to walk you through some ways that you might filter through this. First, I want to talk through what you're looking at right here. So the first thing is the ticker symbol. So this is a few letters that every ETF has a unique ticker symbol. So if you were to look up this ticker symbol in Google, you would get information about this ETF. So none of them have the same ticker, and that allows you, when you're investing in them, to know that you're investing in that ETF. So then after it is the name of the ETF. This tells you the asset class. This is the risk on a scale from 1 to 5. This expense ratio, this is the fee that you'll get charged every year on your on the amount of money that you have invested in that ETF. So you can think of this as an annual fee. And then if you are ready to buy it, you click buy, but that's for another video. So now I'll walk through some of the different ways that you can filter these ETFs. So the first is by strategy. So this actually doesn't have any, so we'll skip that one. Total market ETFs. So this is probably the simplest way to filter and get it down to just a few to choose from. In this case, you have 4 to choose from. So you have a total bond market, you have a total international bond ETF, you have a total international stock ETF, and a total stock market ETF. So the difference between these is that 2 of them are bonds and 2 of them are stocks. And so these can be helpful depending on how you are creating your portfolio. So as we talk about in the $1 Million Year and in our investment courses, what you're going to create your portfolio out of, or it's the percentage of stocks and the percentage of bonds, depends on your time horizon and your risk tolerance. So I'm not going to get into that in this video. This is just to give you an overview of the ETFs. But if you were to just create the simplest portfolio, say you wanted 70% stocks, 30% bonds, you could do that with just 2 ETFs. And you could choose one of these stock ETFs and one of these bond ETFs. And up to you if you want to get international exposure or just US. Again, you have options here, international stocks or just US stocks. And then over here, you can see the expense ratios. So these are all very low expense ratios. Generally with ETFs, you're gonna see expense ratios below 0.1%. It's because they're usually indexed, automated. There's not a lot of active management in these, and so you would expect the expense ratios to be low. So that's why you're seeing those here. Another type of ETF you may have heard of are ESG ETFs. So that's what we're going to talk about next. So we'll remove this filter and grab the ESG filter. So ESG, for those of you who don't know, stands for Environmental, Social, and Governance. And these are funds that have been selected on specific criteria. And you can see exactly what that criteria is on the ESG page, which I've pulled up here. So for example, ESG, so I'll show you back on this. So there are ETFs and there are mutual funds. We're just talking about ETFs right now. So I'll show you what's included in, for example, the US stock ETF. So this is an exclusionary ETF, which means there are certain companies that are excluded from it. And to see exactly what's excluded, you can see it's companies that get their revenue from weapons, firearms, nuclear power, or fossil fuels, production of tobacco, cannabis, or weapons, alcohol, gambling, adult entertainment. So you can see exactly what's included in here. There's usually different elements that are environment, social, as well as governance. It's kind of how they run, governance is how they run their organization. So do they have diversity on their boards, for example? So this is a great way for those of you who are like, I want to not be invested in certain companies that are not aligned with my values. This is a good place to start. It's by no means the end-all answer, but it can be a good start for some of you. So ESG funds is the next category we have here. And these are, first one is international stocks, next one is corporate bonds, and the last one is US stocks. So again, if you were building your portfolio, you would want to have a mix of stocks and bonds. And if you were doing a 100% ESG portfolio, you could do 70% stocks, 30% bonds, and create your portfolio that way. You'll notice here that the expense ratios are slightly higher compared to what we were looking at before, 0.03, 0.07 on the last ones. This is still very low in terms of an expense ratio, so you do not need to be alarmed by these numbers. And the reason for these is because of the work that you saw on this page of, they're having to exclude certain companies, and so there's active work that is involved in that, and so there's a slightly higher expense ratio for these funds. But if it means you get to be investing in alignment with your values, in my opinion, it is well worth it. All right, so we've looked at total market ETFs and ESG ETFs. And again, these are kind of like the highest level way to get full diversification across different markets with just with very few number of ETFs. If you want to get a bit more specific with your portfolio, say there's a geography you want to invest in or a sector that you want to invest in, that's what we're going to talk about next, is really personalizing your portfolio. So if you didn't want to do this, or you just wanted to like add in a specialty, that's where we're going to go. So I'm going to deselect this and go into asset class. So asset class, just to walk you through what these mean, equity is stocks. So that is publicly traded companies. Fixed income is bonds. So that's what we've talked about with corporate bonds or municipal bonds. These are usually lower return, lower risk. And then sector and specialty, these are industry. You can think of it as industry, so industry specific. So the first one, kind of the broadest, is equity. So again, these are stocks, and you can see here, there's different ways you can search. So US or international, market capitalization, this just means the size of the business, essentially. And then value, blend, or growth refers to the type of company it is. If you're ever wondering exactly what that means, you can always just click on this button here. So for example, in the way they describe their value funds are the least volatile. So long-standing companies that use their earnings to pay dividends versus growth funds are kind of like fast-growing. You can think of this as almost like these are tech companies, and these are the like GE of the world, although GE might want to be considered a tech company these days. Yeah, more like they've been around for a long time, they're really steady, versus like faster growing. So you may decide to choose that style, but most likely, I would guess, you're going to be looking at either US international, or you're going to go down to the sector specialty section. So it's basically, you can just play around here. But let's say, for example, you wanted to bring in some international angle into your portfolio. So you could click international, and here you have this we looked at already, the ESG international stock. What's another example? Small cap ETF. So this is all world ex-US. So this small cap, these are like smaller businesses outside of the US. There's also emerging markets. So if you really wanted to invest in emerging markets, add that to your portfolio. Emerging markets can be higher risk, but also higher returns. And then these are specific geographies, a Europe ETF, a Pacific ETF. Yeah, that's all I'll point out right now. This one, total world stock ETF, that's another like super broad ETF. And if you ever want to know exactly what's in it, you can just click on it, and it will pull up an overview of the ETF. And so you can see exactly what's in it. So this one has both foreign and US stocks. So this really is another super broad one. You'd basically invest in this and be done with your stock allocation. You can see the expense ratio here of 0.07. And then a really interesting piece that can be helpful is to scroll down. Well, I'll just show you what all of these are. This is the historic returns. So 1 year, for the last year, they've had returns of 6%. And then you can see what the portfolio is made of. So it's mostly 62% North America, et cetera. And then over here, the 10 largest holdings as of April 30th. And this shows you exactly what they are invested in. So these 10 companies have 14% of the total assets in this fund. And depending on how you are investing, if it's values-based or if it's, instinct-based, you'd look at this list and say, are these companies aligned with my values, or do I think these companies are the ones to be invested in that are growing? You will notice that when it comes to ETFs, these companies are going to be in most of them. So if you're looking at a US-based ETF, these are going to be familiar names by the time you start looking around. Okay, so then just to go back and finish this. So we were looking at international here with the asset class. The other thing you could do is look at sector and specialty. So this breaks it down by the industry of the companies. So these will be different than the top 10 companies we were just looking at because these are more specific to the industry. So let's say that you wanted to invest in, let's say, consumer staples. So you'd look at this, and we'll just show you down here for some examples. All right, so we have Procter & Gamble, Coca-Cola, PepsiCo. These are, household names you would have heard of, consumer goods. So this is a slightly different list because we've gone now specific into the consumer staples sector. So one piece of advice here is that if you are, not advice, this is just education, if you are creating your own portfolio out of sector-specific ETFs, you still want to get a wide range. So you wouldn't want to just invest in consumer staples as your stock allocation. And the reason for that is that diversification is so important when it comes to investing. It means that when there's, big highs and big lows, you are a little bit more protected. And so when you have diversification across different industries, across different geographies, across different size of businesses, you're more protected when some of them go down. So if you are going to choose this approach, just make sure that you get a few different sectors. Again, this is all covered if you do an approach that's more the total market ETFs, because it is getting a little piece of literally every stock in the market. So up to you how you want to do it, but that is a quick overview of ETFs and your options when it comes to investing. All right, best of luck, and let me know what you end up choosing. Finally, if you'd like more support, like a one-on-one coaching call or to join our community of people investing together, check out dowjanes.com, check out our free webinar, and join our community of incredible people who are taking control of their finances and really creating futures for themselves. All right, talk to you later.